I'm Bambi Francisco, and I'm speaking with Mike Maples, and we're going to talk about spotting the right market opportunity, because that's one of his investment criteria, is to spot the right market opportunity, which sometimes is kind of tough to do, I'd imagine. So
that's the hardest one.
You were going to give me an example of a great entrepreneur, like an Ocean 11's team, or the A team, and a poor market opportunity, and how they were just awesome, but they failed because of the market opportunity. Can you give me one?
Gosh. I would say that a lot of great teams in enterprise software have had a hard time. Okay. So I can't remember. There's this company called Casat, which got started a few years ago by one of the executives at BEA, and they raised a ton of money. And I'm not sure what happened to them. And I think that they just sort of never really found their stride, from what I can tell. But there are lots of companies that are started by great people.
Like Evan and Odeo.
And Odeo is a great example, right? Yeah. I mean, Odeo is an example close to home where podcasting seemed like a great opportunity in a huge market, but it ended up becoming a huge free market when Apple commoditized it on iTunes and gave it away. Right.
Which we didn't cover, and I mentioned that I was reading Google's Eric Schmidt was quoted saying it's important to avoid short-term fads, and maybe podcasting was. So in the midst of it, how do you know?
Well, I think sometimes you just don't. Sometimes you have no idea, and I'm sort of comfortable with the idea that I'm a practitioner of randomness theory, right? So that doesn't bother me so much. But what the place where we can spin our wheels, though, sometimes is when we see a company, everybody thinks it's hot, everybody's crowding around it, and you convince yourself you need to invest in it because everybody else who's happening wants to invest.
What is that area
And that's where you can get in trouble.
Social gaming, maybe? Or?
Social gaming is perilously close to being that way. Now, we're in some social gaming companies, right? We invested in Congregate, we invested in NGMoco. Smule could be thought of as social gaming on one level, but we were investing back before that was a hot area. And so, that's the trick, is to figure out the entrepreneur who's non-consensus and right. And is doing it because they have a fundamental belief about the opportunity, rather than just, hey, this is it's going to get funded next week, so let me put something together.
How do you know if an entrepreneur is non-consensus or just plain wrong?
Oh yeah, and very often they just are wrong. But non-consensus and right is where the real money is. Because if you're consensus and right, you're in a sector that gets overfunded and out-competed. And so you want to be the person who has no competition for a while you perfect the idea.
Right, and I like that.
Yeah, if you pull that off, you're in good shape.
Now, would you invest in a poor entrepreneur in a really, really great market opportunity?
Probably not. And actually, this is interesting as well. I think that there is a little bit of a false dichotomy between bad entrepreneur and bad market, because awesome entrepreneurs are smart enough to find good markets. And so they're more correlated than I think most people give them credit for. But ultimately, great markets are what pull people. Some people say history makes people. Some people say people make history. And I think in the tech business, great tectonic shifts in technology create the opportunity that's the catalyst.
Create the opportunity to make great entrepreneurs.
That's right. And a great market will pull a startup to greatness if they're in the right place at the right time.
Right.
And so, you've seen companies before where you say, how did that guy make so much money doing that company? That guy's an idiot, right? And the fact of the matter is they were in a great market, and they were just pulled to greatness. Greatness was thrust upon them. And I've been in companies before and in situations where we executed terribly, but it didn't matter. We couldn't shake our customers off with a stick because we just had the right product, the right place, at the right time.
Sometimes you just have to be lucky. Let's just talk about the overall VC industry. It seems like life is coming back. Definitely, it's definitely better than last year. Certainly better from 2008. Was that when the Sequoia?
Late 2008,
Okay, but there's no IPOs in significance. I mean, I think that in the beginning of the year, I remember everyone thinking 50 to 100 tech IPOs, but they haven't. They're not. They don't exist.
2010 scares the heck out of me, to be honest. Actually, I felt better in 2009 because in 2009 everybody was
something to look forward to.
Well, no, everybody was afraid, and so when people are afraid, they don't invest as much, and there are better opportunities to invest. Actually. Right now, as far as I can tell, we're in the buy high, sell low phase of venture capital.
Prices are going back up, aren't they?
People are paying these crazy prices for these companies, and I don't see any exit environment. And so I'm like, how does that work? I just don't understand that math. I don't know. I can't explain it.
Okay, so but it's making things challenging, challenging for you.
Yeah, it just makes it scary for me. It makes me think we shouldn't do as many deals right now.
Well, then that's probably good from a fundraising standpoint if everybody from a VC fundraising standpoint, because if everybody wants to get involved into these deals, that means there's other, your limited partners or those who are limited partners are probably interested in investing in funds.
Yeah, hopefully, yeah. Hopefully when the time comes.
Okay, Mike, thanks so much for a great interview.
Yeah, thanks for having me.
I've been speaking with Mike Maples. He's the founder of Floodgate. I'm Bambi Francisco.